Can you all tell me in control accounts, why do you prepare a PLCA?
To find out credit purchases.
To find out credit purchases. Can you give me normal balance of a PLCA?
Credits.
PLCA will always have a credit balance below that.
Purchases.
Below that
Bank.
credit purchases. Below that
Yeah.
three unusual items. What are those three unusual items?
Dishonor check, interest charge, and refund.
Dishonor, interest, and refund. On the debit side, what will you have of a PLCA? On the debit
Purchase
side of a
return.
PLCA, purchase return. What else?
Discount
money-
received.
The
Discount.
money that you give. So cash
Cash
back.
SLCA, contra entry.
Contra and the
yeah.
closing balance. Same goes with the SLCA. Your SLCA always has which balance?
Debit.
Debit balance.
Below that,
Sales.
credit sales. Below that,
Dishonor check, interest charge, and refund.
on the credit side,
Sales return.
hmm,
Discount allowed.
hmm,
PLCA contra entry. If there are any irrecoverable debts, we write it. And then balance closer. Bank cash also.
money received also. I hope you know
Yeah.
this. If you don't know, I'm giving you some of incomplete record. October, November 21, paper 21. Before reading the question in incomplete records, you have to go and find out what do they want from you. What do they want from you?
Purchases.
They want purchases from you. Can you tell me how is purchases made? When I talk about,
Credit purchases plus cash purchases.
can you allow others also to think and answer? Fatima and Haris,
Yes, miss.
purchases is made up of what?
Credit purchases and cash purchases.
Credit purchases, if not given to us, where will we find it from?
PLCA.
PLCA. And cash purchases?
Cash book.
Cash book, which side?
For purchases, so debit side.
Cash,
Credit side. Credit.
cash book works on the principle if money is coming in, you will get it on the
Debit.
debit side. If money is going out, you will get it on the credit side. And when you purchase, your money goes out.
Yeah.
Are you with me? They want
Yes.
purchases from you. Try and figure out how will you get purchases. After that, I will help you.
My cover
So
there.
here, they have told us that Shiv is a trader. His financial year ends on 31st August and he does not maintain a full set of accounting records. He is not maintaining a full set of accounting records. They want you to calculate purchases. I know if I have to find out purchases is made up of credit purchase plus cash purchase. Are you with me? Are
Yes,
you
miss.
okay? So when I am talking purchases, I have to make which account? PLCA.
Yeah.
For purchases. I will go and mark everything that relates to purchases for me. This is revenue, markup, sales and trade receivables is not related to purchases, payment to trade payables. Come on, tell me money paid to trade payables. Does this come in PLCA?
Yes.
So
Because it's credit
PLCA should
purchase.
have credit balance. Below that, credit purchases. This is what I have to find out. Payment to trade payables, that means this is cash and bank 257,700. Are you with me?
Miss, I think it was supposed to be the other way around.
Yeah. Are you with me?
Yeah, miss.
Okay. Now go find purchases. Over here, this is the opening date. Closing date. Are you with me? This is opening. This is closing. Opening will give me balances begin down. Closing should give me balances close down. What information I want? Trade payables. Are you all with me? Is there anything that is related to purchase here? Check. Anything related to purchase? Please answer. I'm waiting for it and I'm recording also.
No, miss.
Okay. Opening balance 32,600. Where will we record?
We'll record it on the credit side as opening balance.
And closing balance?
Opposite side.
Opposite side. So that means when I close this, I will get my credit purchases. And when I see the summary of the bank account on the credit side, that means on the outside, there is nothing that is related to cash purchases. Are you with me?
Hmm.
Come on, give me the total
287,300.
on the credit side.
Yeah.
Please sit with your calculators. From that, subtract this.
254,700.
So this is your purchases. If you all are with me, please let's talk about income statement. Don't tell me income statement starts with what?
Revenue.
Revenue, lovely. Below revenue, what do you have?
Cost of sales.
Cost of sales is made up of what?
Opening inventory plus purchases minus closing inventory.
Opening inventory plus purchases minus closing inventory. If I'm not mistaken, we have found out the purchases.
Yes.
Okay, fine. What is the purchases? 254,700. So opening plus purchase minus closing, I will get cost of sales and then I will get gross profit. Are you with me?
Yes, miss.
Okay, fine. I want you to keep this format in mind. Read the question properly again. Try to make the income statement. Try to incorporate the adjustments. Also, one more thing. In incomplete records, the best thing that they will do is they will not give you closing inventory that you might have to find out. Okay, try it. Then, if not possible, I will help you. Also, understand one thing, adjustments. Let's talk about adjustments. Are you with me? Any
Yeah, miss.
outstanding of the current year, what is the effect of it? Any outstanding or accrued of the current year, what
It's
is the
either a liability or a asset, right? Anything outstanding.
yeah, outstanding? You will add it.
Yeah, we'll add to the income statement.
And of the last year, what will you do? Subtract.
Subtract.
And for prepaid of the current year, what will you do?
Prepaid of the current year, we add.
Minus.
We
And last
minus.
year, you add. Yeah.
Oh,
This rules is master rules that you should keep in mind when you're solving incomplete records. So I want you to just work out on this. Come on and try. Try it. Keep your videos on. Come on. We have to make the income statement for the current year. Year is ending on 31st August 2021. Are you with me?
Yes, miss.
This is the current year. This is the last year. In incomplete record, the information is always scattered. So you need to compile the information and get it together. Are you with me?
Hmm.
So I'm taking revenue. Before I make sure that this is my exact revenue, I will go and see something that is related to sales. Revenue means cash sales plus credit sales. So they have already given this to us together. Are you with me?
Yes.
Okay, fine. So there is cash sales. That means this might have been up. Money received from trade receivables. This has no relevance because cash plus credit sales both is given to us. Are you with me?
Hmm.
There is expenses. Expenses could be other expenses. Drawings should be adjusted in capital. Payment to trade payables I have already used. Are you with me? Equipment is a non-current
Miss,
asset. Yeah, tell me.
the the withdrawn 900, shouldn't it be also in the income statement as other
No, I'm
expense?
reading it now. Either you could
Oh,
take one information, see everything and then record, or read, mark and then record.
oh,
I've not yet started writing it. Equipment is 16,000 and this is the closing balance of bank account which should come in the current assets. Are you with me?
Hmm.
I have opening inventory and closing inventory has to be found out. Opening inventory can normally not have any adjustment. So can I just go and write the opening inventory? Are you with me?
Hmm.
Are you all with me?
Yes,
yes, miss.
miss.
Okay. Now I have trade receivables. Do I need the cash or credit sales by any chance? Do I need the cash or credit sales by any chance?
No, miss.
No. So I will see why are they giving me trade receivable again and again. See some information related to trade receivables. Can you find something?
Yeah.
What is it?
Decided to create a provision for doubtful debts of 3% of trade receivables.
Okay. Provision for doubtful debts is 3% for trade receivable. It comes in other expenses or other
Hmm.
income. It could be anything, right?
Hmm.
What is the rule for provision? Anybody remembers? Haris, did you do it?
For provision,
Yeah.
I'll tell you, I haven't done it, but so it's 3%,
So
and we don't have any bad debts.
when I record PDD in the income statement, so when I record provision for doubtful debts in the income statement, what do I do?
Increase in provision is an expense, decrease in
Old minus new.
provision is a, yeah,
If old minus new is negative, it is an expense. If old minus new is positive, it is an
it's an income.
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 Old provisions, how will you get?
All provision by taking the trade receivables of that time, minusing
What
the
is
bad debts and
it?
the percentage.
So 3% of 22,000
Yeah.
old. New provisions, can you give me?
New provision,
It will be 3% of the closing trade receivable 25,900.
777.
What is the old provision?
The old provision,
3 people, not one answer. It's
660, miss. 660.
20,000 into 3%, 660. What is new provision?
777. So it's expense. Increase in PDD.
Old minus new. 660 minus 777. What is the answer? 117.
Yeah.
Is another expense. Come on, I want you to do the PDD part. I'll wait for you. Do the working. This,
Yeah,
you will
miss, I
write
did it.
increase in provisions. How much is the increase in provisions? Can you give me the amount?
117.
117. Old provisions is how much?
660.
Did you read the adjustment properly? When did they decide to make the provisions?
Oh, so it's just going to be 777. We're not gonna take the last year's one.
777. I was waiting. Main thing is that you have to read the question properly. One thing you miss out, it's gone. Hmm?
Yeah.
Hmm. Are you with me?
Miss, could you tell me once again?
Yeah, tell me.
So you didn't write the difference.
Okay. Why will I not write the difference? I usually do that. But they have told that the PDD is created only on 31st August. Af- on this year, in this year. Old provisions was never there. So it is 3% of 25,900. Are you with me?
Yes, miss. Okay.
Are you with me?
Yes.
Okay. Now next I will take. Come on. What is it?
Expenses.
Owing. I will highlight everything related to expenses. Come on, tell me. Read, understand, analyze, and tell me.
Miss, we'll add 400 to the 34,000 and then
Read, analyze, tell me. I don't want the accounting effect. Why, what, and everything.
Okay, I got it.
Tell.
It's 33,500.
How?
We're gonna add 400 to 34,000 and minus 900.
34,000 is the expense paid. Add 400 for the current year. And 900 is included in expense, but it is not expense.
Yeah, so we minus.
So we minus it. Are you with me?
Mm.
So the amount
Yeah.
is coming up to 33,500. Expense gone. Expense gone. Expense gone. PDD gone. Trade payables gone. Inventory is also worked upon. Are you with me?
Depreciation.
Drawings will be 4,200 plus 900. Hmm.
Miss, don't we record drawings in the income statement as other expense?
Bye.
it's in the SOFP.
Goods for
Miss,
own goods for own
uh,
use is subtracted from purchases.
Miss, I was doing this one question and they
Okay, can we
included it in
discuss
the
the
income
on this
statement.
question?
Okay.
Okay, come on. Now what I have to do? Equipments at net book value. Please tell me, what do I supposed to do? What am I supposed to do for equipments? Come on, tell me, what do I do for equipments? What related to equipment should come over here?
So, Miss, you do 16,000 minus 12,800. So you
I
get the
have
depreciation.
purchased equipments for 16,000.
Yeah.
Now the valuation is 12,800.
So that's the depreciation and you recorded other
Yeah,
expenses.
so there is a fall in the value of equipments. 16,000 minus 12,800. There is a fall in the value of equipment of 3,200. So this is depreciation of equipments. So equipment is also gone. Are you with me? Premises is at the same value.
Yeah.
Now, if I see, I have incorporated everything related to what information was given to me, but I don't have this. I don't have the closing inventory. Revenue I have, it was 320,000. Are you with me?
Yes,
Yes,
miss.
miss.
Okay, now come on, tell me, how will I do?
They have given the markup, right? So you convert, it is 1
Markup.
by 4.
Understand
Yeah,
one thing. Markup is 25% given to me. Markup is what?
25
25%.
Markup is
cost,
on cost. It is how much?
1
25%.
fourth.
When I do that, I have been given markup. Markup and margin helps you to find gross profit. It is 25% on cost. So that means it is 1/4 on cost. Are you with me?
Mm.
Yes.
If I have to go from cost to sales, I will make it how much?
One
Cost is
fifth.
the smaller number, sales is the bigger number. Cost is a smaller number, sales is a bigger number. So from cost to sales, you have to go, you will add it. So it will become 1/5 on sales. Are you with me?
Mm.
Are you with me?
Yes, miss.
Miss, why do you put it as 1/5?
Because I don't have cost. Do you have costs of sales?
No.
But I have sales.
Yeah.
Gross profit is given to me as 1/4 on cost. I don't have cost, so I can't find gross profit.
Yeah.
Can I?
You can't find it because you don't have the cost.
So now I will convert this on cost to on sales.
How do you do that?
Just add the numerator to the denominator.
Okay. So
1/4 on
1/5.
cost becomes 1/5 on sales. So gross profit is 1/5 on sales. So 1/5 of 320,000. So this is 64,000. Are you with me?
Yes, miss.
Yeah.
So can you tell me the cost of sales? It will be 320,000.
256,000.
256,000.
256,000. Okay. Now what will you do?
Find the closing inventory.
Find the closing inventory. How will you find the closing inventory?
Will
256,000 minus 23,500 minus 2,547.
Okay. This plus this minus this is giving this. So I will just do everything reverse. 256,000 do the reverse things. Minus 254,700 minus 23,500.
So 22,200.
22,200 is your closing inventory. Are you with me?
Yeah.
This you found as your balancing figure. Just check out. I'm waiting for you.
Yeah.
Give me the total of expenses. How much is the total of expenses?
37,477.
37,477. So from your gross profit, if you subtract expenses, what will you get?
Profit for the year. So it's 26,523.
It's profit for the year.
Yeah.
Okay, are you with me? Okay. Read ahead. Fatima, please read ahead.
Name the
Fatima,
accounting
yeah.
principle Shiv should apply when recording the 900 he used for family holiday.
So family holiday was which expense?
It was a personal expense drawings.
Personal expense. What did he do for personal expense?
He added it to expenses of the business.
What did he do for correction?
Subtracted it from expense.
He removed it because it was personal. That means personal expenses are treated separately and business expenses are treated separately.
Mm.
Yeah? Personal expense is separate, business expense is separate. So which accounting principle have I used?
Business
Business
entity.
and entity concept.
Business entity concept. Very good. I want you to read this part. Please.
Shiv has always valued his inventory at cost price. He is considering valuing the inventory on 31st August 2021 at selling price as he believes it would result in a higher profit for the year.
Discuss implications of Shiv valuing inventory. Anybody remembers the principle of valuation of inventory?
Yeah, Miss Prudence.
Okay, what does it tell you?
It tells the price recorded should be recorded on the lower of cost or NRV.
Which price?
The cost price.
So prudence tells you that inventory should be valued how? At lower of cost or NRV. That means your closing inventory should be valued at a lower price. Why it should be valued at a lower price? So that your current assets are shown at a realistic value, or I could say your assets are not overstated. Assets are not overstated and profits are not overstated. This is what the prudence principle tells us with regards to valuation of inventory. I want you to write this first before I move ahead. Come on, tell me.
Mm, Shiv has always valued his inventory at cost price. He's considering valuing the inventory on 31st August 2021 at a selling price as he believes it would result in a higher profit for the year. Discuss the implications of Shiv valuing the inventory on 31st August at selling price.
So first
Profits
he
are
was valuing it
overstated.
at cost. Now he wants to value at selling price. Can he do
Hmm.
this? Ideally.
No,
Why?
because he'll overstate his profits.
Because if he does that, he will disregard the concept of prudence. Prudence principle will not be observed. If he does this, if he values his inventory at a higher price, that means he's showing his profits at a higher price. He's showing his current assets at a higher price. So prudence principle is not followed, and even the consistency principle is not followed, because last year he was valuing it at cost price and now he's valuing it in another value. So they want the implications of changing the method of inventory valuation. So you need to give 5 points. I'm giving you time. Please write the 5 points. And with this, we complete this question of October-November 2021, paper 21. October-November 21, paper 21. Come on, do it.
Miss, what